Fair value gaps seem to be everyone's trading style. I'm going to explain how to attack this and how to implement this into your strategy and why you don't need to change your strategy completely to what everyone else is doing. You need to understand the concept behind what's actually happening out there. Over the past 45 days, I've made roughly $20,000 to $24,000. That's not including some of the fees I had to pay, but again, just on these prop firms on top one. This is who I use for all my trading. You can check their amount. The link is down below for their straight to funded accounts. I'll go more to that in a second, but I'm using these exact strategies here in the video as well. That's not including stocks and what's happening with other futures platforms like Top Step, My Funded Futures. This is my biggest one, so this is why I'm showing this one, but important to understand that. Now, before we jump too far into anything, some of you guys might not even know what fair value gaps are, but I would be willing to bet most of you do or you have seen this concept. And I think it's important that I talk about this because I'm seeing so many people on the channel are interested or ask why I don't use this. But the fact is I am somewhat using this in a way because if you listen to the principles of how I'm trading and how I'm finding my targets, entries, etc., it's all there for. So what is fair value gaps and what's happening there? Technically speaking, a fair value gap is formed, and you're going to find different definitions. This is just the cleanest looking one. A fair value gap is formed when a low of a candle is higher than expected. This is just telling you what happens there. But a fair value gap refers to a price range on a chart where buying and selling activity is unbalanced. This typically arises during sharp price movement, resulting in a section of minimal or no trading. Put simply, a fair value gap represents an area of the market that has skipped over like a missing puzzle piece. Over time, the market often attempts to revisit or fill this gap, bringing back price to that level. Now, I don't like to say a bunch of big fancy words when it comes to my trading. I don't try to overcomplicate things, and I don't try to make a million different steps. The most important thing, in my opinion, is that everything kind of comes back together. Basically, that you can start at point A, you can go to point C, but then ultimately it's a circle, and it just works over and over and over. Now, I do think when you look here, on balance, all these other terms, I don't think we need to talk like that. I think we can just understand what's really happening out there. When you're looking at some of these charts, ultimately what you're looking for with fair value gaps and what's happening with that type of price action is finding where there's liquidity and where there's not liquidity. If you talk to any of these traders, I think they would agree. Maybe I'm putting it a little bit simple, but that's traditionally what's happening. Now, I'm going to break this down in a step-by-step process of how you can start to implement this exactly into your own strategy and into your trading as simple as tomorrow or going into Monday. So it's important to understand and lock in what we're going to be doing and how we're going to be attacking this. I'm going to go in from the chart viewpoint all the way back to these, how, again, the step A through Z of understanding this as well for yourself. I'll also go into which brokers I use as well, and I'll do that really quickly, actually. So again, for straight to funded, I use Top One. The link is down below. It's just the most affordable and makes the most sense, and you can also have the most accounts. I like it the best. Again, I use the Sim Pro accounts, and if you use my code Hefe, you get an additional 5% off, so it's like 180, 190, I believe, right there. So again, you can check that out. The link is down below. If you're okay with doing evals, I would use something like My Funded Futures. This is the other one. This is not straight to funded. Just to let you know, you do have to pass an eval. You can go with the starter accounts, which is what I recommend. The 50Ks, they're $97, or you can go starter plus. Gives you a little bit more leeway. But again, what I would do, you can use code Hefe, you get a bigger discount as well. They always have big discounts going back and forth. I don't know the exact number today, but again, these are the two that I would recommend and I'd be looking at and who I use personally. I'd use Top Step as well, but again, those are my biggest ones right now. Now, going into the chart of what we're going to be doing and understanding. Now, I want to make sure everyone understands before we go crazy. Before we actually jump into the chart, I want to start going over where we should be thinking about and what we should be doing. Now, again, there are some different terminologies when it goes into fair value gaps and understanding your entries, exits, etc. I don't use those specific fair value gaps for my entries, right? So technically speaking, I believe what you're looking for here on a fair value gap, giving you an example, a rough example, so don't attack me, right? This would be considered a fair value gap. The candle wick begins here. Your next candle wick doesn't start till there. So that would be a fair value gap, okay? Now, what I use is more of understanding levels of previous action of where buyers and sellers were. This is the premise of what I do. I understand where buyers were previously, where sellers were previously. Now, the one area where this gets a little bit murky is when you're getting to all-time high territory because you have less information, if not any information. But at the same time, anyone that tells you what's going to happen at all-time highs, they're just lying to you anyways because they don't even know because you're in price discovery, and we've seen the most irrational behaviors at price discovery. So I try to only talk about what I know and what works for me specifically. That's important to know. You're also going to be able to use this not just with futures, but with stocks. I see a lot of traders trying to use fair value gaps with stocks. I think that's the stupidest thing you could ever do. The principles just don't apply as much. However, if you're using just liquidity and understanding what's happening with the overall action to the up to the downside, where buyers are getting aggressive, where sellers are getting aggressive, that does make sense. So there are some principles in there, but it's not all tied together like I think it does tie together better with just futures. Okay, so understanding where we're at and what we're doing, why we're doing it, right? So important to know that. So again, what we'll do is jump quickly into here, the step-by-step process, as you guys can see, and then we'll move on, and then I'll actually show you what I'm doing and how I'm doing it every single day. The first thing that we're going to be doing is identifying buy areas and sell areas. We're identifying where the sellers are, where the buyers are. Now, oftentimes what I tell you in all my videos is understanding and developing a trade plan every single day. And what I do is I just show you, anytime you're going to get something from me here, it's going to be an example that I most likely used on the previous week or I just had accomplished this past week, right? So I always go back and revert back to Discord. I'm never telling you when to buy. Everything I do on this channel is free. Like everything that I do here, I get paid a minimal amounts of money compared to all my other channels and all my other basically social media platforms. This is all education. So, and I always recommend before you pay for anything, exhaust as much free resources as possible. So even if it's not my Discord or someone else's, just spend as much time as possible getting all the free information because there's so much free information out there. I do believe someone can help you, but I think that the free information is king, especially right now. So what I do every day is I go into the market and I have a futures run up. This is even for trading stocks, right? I don't go into a trade plan specifically on all my stocks, but when it comes to futures, it's the most important thing you need to understand because you need to understand where buyers are and where sellers are. And if you understand that, it makes the rest of what you're going to do very simple. And this is just a quick representation of what my chart looks like before the market even opens, okay? NQ consolidating overnight all-time highs. Honestly, could be the best case scenario if you want to get continuation. I want to see a hold over 23.22 to previous all-time highs. If we stay over that, looking for price discovery into all-time highs. Under 23.22, looking for 23.1 and then back into 2300. Okay, and I do this every day, over and I mean it's repetition. I just say it over and over. And we can go down to ES, giving you an example there, right? Under 63.43, looking for 63.33, then 63.15, all the same levels every day. And these are the same levels I use every single day over and over. It's not like anything crazy. So you identify where they are. And it's important to understand once you identify them once, you typically don't have to go back and do a bunch of work again because most of your levels in understanding where these areas are taking place are constant, right? That's the one thing with fair value gaps that I'm not a fan of because although this could be in theory a fair value gap, right? What we have to understand is if you break down below this action, right? You start to break down and you get below this, well, this is gone. It's no longer relevant, right? But in reality, I urge the question, if this level is a very massive spot where buyers are continually showing up, shouldn't that stay relevant in our minds? Because if it was tried and true 1, 2, 3, 4 times, you know, a month later, if you break down but come back to that level, don't you think it's going to have a good reaction once again? I think that's the part where people get confused or they just ignore. And I think that's kind of silly. And again, if I go like to the 2-hour chart here, you can quickly see over the past like 2 weeks, you've just been range bound on all of our key levels over and over and over. It's just over and over and over. So again, that's the part where fair value gaps just don't really attack, and it's more for quick in and out scalping. But at the other time, I think you get some of your best scalps and best intraday trades by understanding where those sellers are, where those buyers are, right? So again, why you have to identify those areas specifically. Moving on from that, we want to find the illiquid zones. And this is where I think fair value gaps get a good rap because you're understanding where the liquidity is of where buyers and sellers are developing in a short-term action. But when you find those illiquid zones, that's where you make a bulk of your money. And what do I mean by illiquid zones? Okay. So for instance, if I go into something like NASDAQ here, and this is a 2-hour chart, we'll go to the 15-minute chart. Okay. Now, what you know here is that basically there's no really big levels in between these areas, between 23.2 and 23.1. You could argue that you had a little bit of a resistance, like right here, like 23.18, 23.17, but ultimately there really was nothing, right? We'd had nothing marked out. So when we started to mount that massive previous all-time high, we knew it was going to be pretty quick back into all-time highs, which is what happened. If you get, you know, back below your 23.1, we know we're not that liquid until we come back down to 22.934. So what do I mean by that? When you get in these areas of illiquidity where there's not a lot of previous action, that's where you get your best movement. So if I'm trading in a tight range, like for instance, right here between 23.23 and 23.18, that's not a great area for me to trade because I'm not going to have that much reward potential. However, if we mount above this level, right, I know we're pretty illiquid back in the highs, almost 100 points. Or if we get below this level, we have about 80 to 100 points back to the downside before we have anything. And based off of previous, test and breaks, you've almost had 100% rate of coming back down to that level if you do break. Now, will a trading strategy always be 100%? No, eventually something's going to fail, something's going to break, and you're going to lose trades. So I think it's also important to understand. Another good example is looking at something like ES. So again, we know it's pretty illiquid between 63.43 and 63.33. It's only a 10-point range, but we know that's an illiquid area. So if we hold below, high possibility we break back down. Below 63.33, we know it's pretty illiquid back down to 63.15. So it's important to know those areas of where you're going to get that good movement overall. And this, again, plays back out with stocks also, right? I could go into a handful of names here. For the time being, I'll use something like PLTR. It's been a really illiquid mover as well. So again, you mark out your levels of what you're looking for, why you're looking for it, and again, you trade in between those levels. Now, if you're in the middle of those areas, it's usually not a great opportunity. But once you start to break and mount, you get a good opportunity. So for instance, above 140, you move into 145, and then straight back down in that illiquid area, back down to 140, and then right back up. And that's the action that you want to see. You don't want to be stuck, and I know we've all been in those situations to where you get inside trades and you're stuck range bound back and forth. That just creates a bad opportunity for options, trading in general, whatever it may be, and just creates anxiety, stress, different emotions you don't want to be in your trading. And on the other side of trading options, it just hurts your contracts because you're not moving in a fast time frame, right? You want to get from point A to point B as quickly as possible so you can make as much money as possible on your contracts and be hopefully in a good position to make money going forward, right? And again, this should all be repeatable of what you're looking for, why you're looking for it, right? And then again, you mount to 145 here and you break into all-time highs. So, and just again, I like to go back and reference this so you guys can be aware of why I was looking at this as well. And just to know, because again, you can be just full of nonsense, full of shit, right? So again, the same levels that we talked about, and I posted this on Twitter as well. I said Palantir mounts 145, it's off to the races. You heard it here first. Again, the same levels. Again, you can see before we ever even broke, I had this marked out. You mount to that level, break, retest, and again, off to the races over $10. So it's understanding what and why you're looking for it at those areas, at those zones. And if you're asking, well, how do I find those levels specifically? I have tons of previous videos here on the channel where you can go back and look specifically at those. This is more of a logic type of video of understanding why and what you're doing as well. And oftentimes what you can do is just mark out previous highs of where you're getting most of that action, 3 test trends, things along those lines as well. So important to understand that. So once you find those illiquid zones, then you start to understand which direction should you be trading, right? And number one, is there even those illiquid zones near you, or are they not present, right? And then once you understand that, you understand how to address and move on from that trade from there as well. So again, you go from there into trading aggressively, trading conservatively. And I think this is another big area that most traders struggle with, of when to get aggressive, when to be conservative. Because you have to understand, you're not going to go into the market every single day and have 30 opportunities, have 10 opportunities, have 5 opportunities. Some days you might have 1. Some days you might have none. Some days you might be trading in a flat range on NASDAQ. And it's just, you don't need to be doing anything. Like, you just need to turn the computer off and walk away. But some people don't have that capability. And what we don't think about is that, is it worth more money to just not do anything and not lose money, or to trade aggressively when you know you shouldn't be and have a higher % chance of losing money? And I think we don't put a price tag on those two things. We just think, okay, well, it's only not worth it if we're losing. But in reality, you're putting yourself in a higher % chance of losing in general. But if you start to look at these areas of understanding, okay, well, if I get above this level, I know we're going to get a big move. If I get below this level, I know we're going to get a move big back down based off of previous moves, based off of previous stats, right? Just things that you have to be looking at and considering at all points of time. And I think that we don't think about it from that logical viewpoint. We look at it as a binary viewpoint of, am I winning? Am I losing? But you have to understand how are you putting yourself in the position to win? How are you putting yourself in the position to lose? Because there is a game within that game as well, in my personal opinion. Moving on from there, we're monitoring market conditions, understanding how we're moving, going from there, and adjusting the strategy as we see fit. Now, as far as adjusting your strategy, that means moving your stop loss, moving your take profit, stops to break even, scaling in, scaling out, whatever it may be, as you're getting more accustomed to understanding these levels and those illiquid zones. Again, a great example would be understanding this right here. Either you trade very conservatively, you don't trade that much at all, or you adjust your strategy and understand that you're only looking for 10, 15 points back and forth. That being it, you're not looking for a swing, you're not looking to size in too much, etc. So you're adjusting that strategy to where you're at and where you're going ultimately and how you're going to be moving forward from that area. Again, pretty basic concepts, but again, we're thinking more about how do we just make the perfect trade with what sets up the perfect trade. And that's what I think is the biggest problem out there is we don't think about the why, we just think about how do we get it, how do we buy, how do we sell. And that's the more important thing that we have to start understanding. And then from there, of course, you just review your trades. And again, it cycles back through. And everything that you're doing should cycle back through. I need to make this very clear. When you're trading, guys, everything that you're doing should be a step-by-step process, repeatable, and you can cycle back through it. So if you mess one area up, you can go back one step. So instead of you taking 2 steps forward and 5 steps back, you're taking 2 steps forward, 1 step back. And then you can quickly adjust and understand what's happening. Now, occasionally, will you mess up? Will you have issues? You will. I have issues. I have problems. I have bad days here and there. It happens. It's going to happen. But it's important that you understand how to fix those problems, how to adjust, and that you're not just shooting in the dark at all points in time. And that's how ultimately I'm finding these trades and how I've had success over the past 30, 40 days as well, and how I've had success in the past before that also. If you have any questions, let me know down below. Twitter link, Discord link, all my links are down below as well for who I'm using for prop firms. Have a good one, traders. See you next week.